Hello, everyone, and good morning. Welcome to our morning market update for Friday, March 31st of 2017. Today is a big day, and the reason it's a big day is because it's the end of the quarter, all right? The end of the first quarter of 2017 is going to be in the books after today, so it has a bullish skew. You need to know that, and I'll explain to you why as well. It's got a bullish skew in the sense that there's an expectation for the market to rally today. All right, a lot of these funds, mutual funds mainly, that have cash that want to buy underperforming stocks, that want to get long the market and get some equity exposure. This is theoretically their last day to do it. Not theoretically, factually, it's their last day to do it. So it's now or never, basically. If you want to pump up the book for the end of the quarter, you got to do it before the closing bell of today. So today's the end of Q1. There's going to be a bullish bias. I think we got a lot of bears trapped to the downside, and it's going to take a much larger effort to sell off this market than it will to pop it back up. So be on the lookout for some dips in the early morning session. Try to get into them. And I think we got a rally extension from probably mid-morning to about into the close on the US 500 or the ES or the S&P 500 futures. All right, that's kind of the outlook. That's why it's a big day. It's a big day for another reason. It's a big day because today is the last day. At midnight tonight, our prices go up to $139 US, and they're currently $79.
The U.S. economy is clearly not overheating.
The U.S. economy is not overheating. U.S. Fed's Dudley's speaking right now. Let me turn it off, actually. Let me turn off the wire. Not the show. The news wire. Dudley's on the wire. I should probably be listening to that, but instead I'm spending my time with you, and that's a good thing for all of us. I enjoy doing these updates. I enjoy the comments. I enjoy hearing from you guys as well, so please comment if you have any questions, or if you just want to participate and say hi, do it in the comment box. We'd love to hear from you. All right, so we got that. It's going up to $139. There's going to be two packages. It'll be options and futures for the price of one at $79. You will never get that deal again. Going forward, it'll be $139 for the two packages. If you want to just do day trading futures, it'll be $99. If you want just the options package, it'll be $79. All right, because it's the last day, I feel I owe it to you to explain what you get in that package, and then we'll do our morning update as usual, and I'll give you some insight to look for today, what happened overnight. All right. Options, you're going to get a daily unusual activity report. That means if there's any stocks that have large option activity, I send you an email at noon to about 1 p.m. Eastern, and I let you know what stocks those are, what the opportunities are, what the trades look like in the market. Because it's not as simple as saying, oh, it was volume on the put side of the options. That doesn't mean anything. You got to put it in conjunction with other transactions and build a bias on what the trader thinks is going to happen, and that helps you. That gives you insight. Just in the last week, we had stocks that have popped 20, 30% off the back of that data. It's a really interesting report. Every midday you get it. It's going to include all the stocks that have traded actively on high options volume based on my scanner. So I'd send that email out. On weekends, you get access to a full options report, including what market makers are saying will happen in the upcoming week and how to calculate those levels, how to know what the pivots are, and all the information as such on the option side. And top of that, you get a Sunday market analysis live video for about an hour every Sunday, where we set up the week, tell you what to look for, analyze what's coming up, analyze what's happened, and that's kind of the options package. The futures package is a full-on comprehensive. The options package, by the way, is $79. The futures package is a full-on comprehensive way to learn day trading. All right, you're going to learn things that you have never heard of before, and I almost guarantee you that. In fact, I do guarantee you, you're going to learn at least something in there that you never thought existed, that you say, how did I ever trade without that? That's the benefit of the futures course. I put together probably the most comprehensive training for traders on the planet. I stand by that. I think a lot of our members stand by it as well. All right, it's basically proprietary trader level training. You're going to be looking at the same data, same tools. You're going to expose to a whole new world. It's not about moving averages and chart patterns. Worked in the 90s. Good luck with that today as a day trader. All right, so look out for that. That'll be $99 as of tomorrow morning. You get both of those packages for $79 until midnight tonight, and then that price is never coming back again. Try it out. All right, let's get started today's market update. Look, I don't show allegiances to many things. I keep it politically safe. I try to hold back my opinions and views and try to present to you the fact. But I got to tell you, my hockey team is about to make it in the playoffs. They're fighting for their life, and I got to support them. So go Leafs. I don't care what you guys write in the comments. I don't care what kind of feedback I get. Screw it. This is why I work for myself, to be able to express myself and enjoy myself, right? I'm rooting for them. I know there's a lot of other teams out there. I actually like hockey. I like good players. I like teams. And, being from Canada, it's one of the sports that we excel at. So I support them. Hopefully the Leafs make the playoffs. If they do, I'll at least get a couple of tickets to go watch a few games. But I'm excited. The team's rebuilt. We have a whole bunch of young kids on the team, and they're really killing it. And they've done well. They're developing well. So how could you not support that? Anyways, enough of that. You're wondering why I'm wearing the jersey. There it is. Okay, go Leafs. In Asia, in Japan, down 0.8%. Hong Kong markets down 0.4%. China down 1%. India up 0.5%. So markets weaker in Asian session. In Europe, mostly flat. Paris down 0.1%, but Frankfurt and London, they're all flat for the day and for the session. All right. Along with the British pound, it's also flat. There's some news out of the UK this morning, though. 6:30 in the morning. Let me just see if that's updated. Futures are gaining a little bit. I don't know if you guys have spotted this trend, and you should as a trader. That's your job. You're a pattern recognition machine. Is that whatever happens into the 4 p.m. close, it tends to get faded in Globex. Globex is an electronic session of trading futures that starts in the early hour. Pretty much at 6 p.m. Globex opens up and leads up into the European Open at 3 a.m. During that period tends to be a fade of the trend. It's been a very reliable trade. And I think by the time that you hear about it on YouTube from me, it stops working. So be careful if you're going to put a lot of size on that merit. But I'm just saying it's worked like a charm. It's been some great opportunities trading the Globex for those of you that work full-time, want to come home and take advantage of some price movements. Fade that trend has been very, very precise on the S&Ps. They're down a little bit. They've recovered some of those gains this morning, and they're looking to push on the high side. Watch for a weak open. Watch for the dips to stabilize, and then watch these the big boys run up the market all day long. That's kind of my call. Today's economic calendar, 8:30, we had Q4 GDP, initial jobless claims, Fed's no, that's not it. Like, no, that happened yesterday. All right. Markets down slightly. Today's economic calendar, Chicago PMI, 945. Personal income and outlays at 8:30. It's not really an important one. Consumer sentiment at 10 a.m. That's an important release. Fed's Kashkari speaks. Dudley's on the wire right now. Kashkari goes up at 10 a.m. The Baker Hughes rig count for oil is at 1 p.m. Oil smashed above that 50.10 yesterday. Went up to 50.30 on the high. And we're looking at oil price. The 50.10 was a big level for a potential stop. It rotated around there once or twice, but there's really a lot of strength in oil right now, and it's on the back of short sellers getting squeezed out. Don't get fooled by the fact that you think there's buyers in this market. It's not buyers. It's shorts that came in late, that came in greedy. They're just getting kicked in the teeth right now, and they're screaming and crying on the way up. That's what's happening. That's what's driving the rally. Buyers probably above 50 half. That's where you're going to start to get real longs start to get in, or some dips from here. Fed's Bullard speaks on U.S. monetary and economic policy at 10:30 p.m. tonight. So make sure you stay up and watch it. Read about it tomorrow morning. Okay, so we talk about price increases. Out of the EU, President Tusk, European President Donald Trump. I don't know what's wrong with me today. I stayed up late last night. I had a hockey of my own. Donald Tusk says that he puts out a tough negotiation path for Britain and their Brexit. He basically said he's not going to wait to talk. He's going to wait to talk about economic discussion after they've already made some progress on this Brexit. So he's saying, I don't want to talk to you right now. Go do your Brexit thing, and then once you advance with that process, then give me a call. Essentially is what he said. UK had some pretty bad GDP data. Final GDP quarter to quarter came out at 0.7 versus what was expected. The problem is year over year fell to 1.9 versus 2.0 even. So that was kind of a lower GDP. And the latest revision of the fourth quarter GDP was weaker. All right, inflation data is higher, so things are starting to weaken up on the UK economy. In addition to that, UK house prices recorded a fall for the first time in 2 years. So the housing market starting to soften up. It's about 3.5% year over year increase versus 4.5% prior. So that's a bit of a drop. It's declining. There's some reason for concern out there. All right. 2 FOMC members spoke, and you got to know what they said. If you're not tracking along with FOMC voters and speakers and Fed speakers, you're missing out on 90% of the market's movement. You know, you ask, why did something happen? Well, it's usually big news. It's the Fed's guidance. It's how they talk about interest rates and a number of other things. But you need to know when Fed speakers are on the wire. You need to know intimately who every Fed speaker is. You need to know, are they a voter or not? Okay, some of them vote, some of them don't. Why? Because it matters what they say. You need to know, are they hawkish or dovish? Do they think interest rates are going to go up or down? What's their traditional stance? Why do you need to know this info? Because the market wants to know that and wants to price it in. If a dove gets hawkish, that's probably going to start to increase expectations for rate hikes. All right, and so here's two guys that spoke. Fed's Dudley, he's a dove, and he is an FOMC voter. Okay, and he said the following: rate rises are needed to keep expansion on track. Very important statement. He's saying that we do need rate raises. He's a dove. So what does a dove mean? Somebody who expects interest, who wants interest rates to be lower. A dove has said rate raises are needed to keep the economy on track or expansion on track. So that language has shown he's kind of converted on the hawkish tone as well, or continues to be on a hawkish tone. He also says economic risks may be tilting toward the upside. And on that, he probably said, hey, look, we need interest rates, but obviously as a dove, economic risks are overhead, so let's be careful how quickly we raise. So he's hawkish, but then kind of finished off dovish. Interesting statement. Fed's Kaplan, he's moderate. So basically, doesn't really matter what side of he's on the fence. He doesn't support either side, but he is a voter as well. So Kaplan's important. And he said 3 rate hikes are good base case for 2017. So that does it. That just about cements the fact that we're going to get 3 hikes. We've already had 1. The next one's likely going to be in June. And then the next one in September or December, one of those 2. If the economy continues to chug along, it'll be September and December plus June. And we already had one in March. So that'd be 4 rate hikes. And the Fed has set that expectation. 3 is possible. 3 is very probable, in fact. 4 is possible. All right? 3 is very likely. 4 is possible. We might even get up into that side of the monetary policy. All right? So that's what you got to watch out for. There's more speakers on the wire. Dudley today as well. He's on the wire at the moment, and I got to read over afterwards before we open the market. So that's what's going on. Fed's starting to sound hawkish again. When we say that if the economy chugs along, what does that mean? Because I don't think a lot of people understand that. What it means is that they want to see 2 things. What are the 2 things they've identified as weaknesses in the market? Jobs and inflation. So if we start to see some data out of the CPI, so CPI starts to strengthen between now and the June meeting, along with the jobs report, next Friday is a massive day for jobs. Non-farm payrolls come out. We got to see what that number looks like. If that starts to do really good, we've had smashing numbers the last couple of times. Non-farm payrolls have been on fire. All right, inflation has been ticking up. The Fed's getting all the reason they need. If we start to get strong jobs, higher inflation, that goes from 3 to 4. All right, can the market support a 3 to 4 increase? We'll have a look. So just know about this stuff, because trust me, guys, it's not as easy as it once was. The game was easy before. I'm the first to admit it. All right, in 07, 08, even before that, when the pound first started trading on electronic, I started trading early 2000. It was freaking easy. Draw a trend line, buy the dip, because everyone was doing it. 99% of the retail crowd didn't even have access to the tools that a lot of the banks had that they were trading with. All right, that game's easy. When you were a floor trader back in the day, if I had all 1 orders, buy stops on one side, all right, and then sell orders on one side, you don't think I know the market and I can cross them? You don't think there was any shady stuff going on, front running and of the like? You know, it was easier back then to make money. Today's industry, the globalization and this digital age has brought about a lot of information that comes across the wire, and it's your job to read it, see it, acknowledge it, and make a decision based on it. But at the end of the day, leave this broadcast like this. Our job as traders is not to decide where the market's going. All right? It's not. Our job is to see the market and see where it's going and execute our strategy. Because if you pick a direction and you're right, pat on the back, big deal. You know, it's food for the ego. You were right, yay. But did you make any money off of it? And that's the real question, because you're not doing this job to be right. You're doing this job to be profitable. Remember that. Focus on making money. Forget about being right. One last bit I want to share with you guys. Let me see how I'm doing for time. No last bit. I got to go open the trading room, and we got to get started. We got an exciting day today. I'm hoping to be done by 11:30 in the morning. I'm going to get in, step on this thing, and get out and have an early weekend. You guys have a phenomenal weekend. Again, price increase coming Saturday morning, but not just a price increase, but a value increase. Get on board. This is literally your last chance. Next time I talk to you, this chance is up. So jump on board. Go to tradeproacademy.com/pricing. Lock in the price and get double the value for half the price. All right? That's the least risky thing you're going to do in the markets in your life. Take care, guys. Have an awesome weekend. Take some time to enjoy some time with your family and your loved ones. And remember, we do this stuff. We grind from Monday to Friday, but we got to unwind and relax on Saturday and Sunday. Okay, don't be out there demo trading Saturdays and back testing stuff. you got to have some time for yourself. Take some time and relax. Take care. Have a great weekend. I'll see you on Monday for another morning market update. Remember, bullish skew today in the equity markets. Look for early dips and try to step on them. Take care and have a phenomenal day. Bye, YouTube. Subscribers, give me 1 minute. I got to open up the room and end this broadcast. And we're going to look at some levels, do some analysis, and do what we do every day. Pinky, try to take over the world. I'll be back.